Hi, my name's Ed Merryman, your Maryland mortgage man. And for going on 15 years, I have proudly been serving Maryland citizens with their mortgage and home financing needs. Last week, we were in a discussion about how your home is valued and the two most commonly used methods to come up with that value. We're going to come back to that discussion at a later time. In light of the concerns about the coronavirus and the Federal Reserve's moves to cut the federal funds rate to 0%, I wanted to take this week's time and dispel some of the ideas about this move from the Federal Reserve and its immediate impact on interest rates. The Federal Reserve's funds rate is the interest rate that banks lend excess reserves to each other on an overnight basis. This rate, under normal conditions, is reviewed and set 8 times per year. But as you can see over the last week, can be changed as the Federal Reserve sees fit under times of economic need. This rate is much slower moving than mortgage rates that can change up to several times per day. So what determines mortgage interest rates? That will be the bond market. Mortgages are bundled into groups of transactions and sold on the bond market under mortgage-backed security or mortgage bonds. When the Federal Reserve cuts the fund rate, it affects short-term interest rates, and that in turn will have a quick impact on credit card rates, car loans, and lines of credit, all of which are meant to give the economy a quick boost. It really doesn't have an impact on longer-term loans, and that is the category that mortgages fall under. What is often shocking is that mortgage rates actually move contrary to these federal funds rate cuts, and that is what has been happening this week. Mortgage rates have gotten much higher over this week, over 1% higher from last week, actually, on a 30-year fixed mortgage. What you realize is just because the federal funds cuts the banks a break on federal funds rate, the banks do not have to pass that break to the consumer in the form of lower mortgage rates. Depending on what happens with the coronavirus, mortgage rates will drop again. So I would suggest 2 things here. 1, you can get your paperwork ready for when those lower rates return, because the markets will come back, and I believe that we will recover from this. The paperwork that you can get in order while you're at home, you need 2 years of your W-2s or tax returns. You need 30 days of your most recent pay stubs, your homeowner's declaration page, a copy of your driver's license and or ID, and 2 months of bank statements. Get your credit history checked and correct any errors that you might find. And then when rates drop again, which they will, hit the go button. I'm here to assist you. The other thing you can do, in this time of unprecedented reset, you can take time to be intentional and realize what values most to you. You can be intentional about loving your family and encouraging them. We'll be asked more than often to do deeds of courage. We'll be asked to love our neighbors. There's a time that we can shine brightly when other people are scared. So I would take this time, be intentional, work on your character, and be the person that you want to be. Be a hand and a bright light in this time. Our country needs you. And when mortgage times come back, I'm here to help you. My contact information's on the screen. And if you're considering home purchase or refinance, I'm here. Until next week, this is Ed Merryman, your Maryland mortgage man, wishing you the best.